A sudden dip below $2,000 on Ethereum isn't just a number. It's a potential liquidation trap for nearly $1.8 billion in leveraged positions. CoinGlass data shows that a move under $1.952 could force $986 million in long liquidations, while a break above $2.154 risks $810 million in shorts. This highlights how even small price swings can spark massive forced flows in the ETH market. 12 major banks just joined China's e-CNY network, marking a big push for the digital yuan's expansion. The People's Bank of China now has 22 banks supporting e-CNY, aiming to boost adoption. But digital yuan still accounts for only 0.16% of total currency in circulation. Despite the upgrade to interest-bearing deposits, most users stick with Alipay and WeChat Pay, highlighting the challenge ahead. Oil prices just spiked 10%, while Bitcoin slid 4% after Trump's tough talk on the West Asia crisis. Markets are on edge, as Polymarket now sees a 62% chance of U.S. ground invasion in April. With BTC stuck between $60,000 and $70,000, traders are bracing for more volatility amid tax season and global uncertainty. BlackRock's nearly $2 billion crypto investment since the Iran war began signals a major shift in institutional strategy. The asset manager boosted its Bitcoin holdings to over $53 billion, while trimming Ethereum exposure, highlighting Bitcoin's dominance as a digital hedge. With 89% in Bitcoin and 11% in Ethereum, BlackRock's portfolio now totals $59.57 billion, intensifying competition for traditional crypto exchanges. SpaceX's confidential IPO filing could set a new record with a $1.75 trillion valuation, drawing intense market focus. Elon Musk's move has revived Dogecoin attention, as Doge trades near 10 cents resistance and traders eye $0.105.12 if momentum continues. The Musk ecosystem's impact on crypto sentiment remains strong, with investors watching for spillover effects from this historic listing. Beneath the surface of a stagnant Bitcoin price, a major power shift is underway between sellers and corporate buyers. SEC filings reveal public companies acquired 62,000 BTC in Q1 2026, while whales sold and ETFs stayed flat, fragmenting the market near $70,000. Despite bearish momentum and prices below key moving averages, persistent corporate accumulation signals a deeper structural change in Bitcoin demand. MARA's massive $1.1 billion Bitcoin sell-off just flipped the leaderboard, pushing Metaplanet to the number 3 spot worldwide. The US miner offloaded over 15,000 BTC to cut debt and pivot toward AI infrastructure, while Metaplanet's aggressive buying spree now puts them behind only Strategy and 21 Capital. Whether Metaplanet holds its new rank depends on continued funding and MARA's next moves. Metaplanet's bold Bitcoin accumulation strategy just shook up the global rankings. In Q1 2026, Metaplanet acquired 5075 BTC for $405 million, raising its total to 4,177 BTC and overtaking Mara Holdings. Despite a market dip and unrealized losses, Metaplanet remains committed to its long-term Bitcoin reserve plan. Franklin Templeton is making a bold move by acquiring CoinFund's spin-off, 250 Digital, using Benji tokens, its tokenized money market fund. This deal launches Franklin Crypto, a new division focused on institutional crypto investment, bringing in a specialized team and expanding digital asset offerings for large clients. The acquisition marks a significant step, as traditional finance integrates blockchain technology to meet growing institutional demand. And even major Bitcoin holders start liquidating, the market's mood shifts fast. Empire Digital and Genius Group sold large BTC positions to repay debt, reflecting a retreat from the corporate accumulation model. With Bitcoin prices dropping below $70,000, companies are prioritizing financial stability and risk management over holding crypto assets. For the first time, Bitcoin gets a formal credit haircut. Moody sets a 28% discount and triggers for forced liquidation. This move officially recognizes Bitcoin as collateral in traditional finance, with $100 million in bonds now backed by BTC. The deal opens doors for more crypto-backed loans, but also means price drops could trigger automatic liquidations across the market. What happens when a company bets big on Bitcoin, then sells it all to pay off debt? Genius Group liquidated its entire Bitcoin treasury, wiping out $8.5 million in liabilities, but exiting the crypto market completely. The company plans to rebuild its Bitcoin reserves when market conditions improve, shifting focus to education tech and reporting a 171% revenue jump in Q1 2026.